the first one we talked about on financial objective is survival. And for survival, it could be for a new business or existing business. For a new business, because you need to gain customers, you need to gain the trust of customers. At that period of time, you don't think about making profit. You don't think about the profit satisfies. You don't think about expanding. You would rather think about what? Surviving, remaining relevant in the market until you have the trust of customers. That is survival for a new business. And for existing business, like I said earlier, existing business might also need to think about survival when the trading conditions are difficult. For example, during COVID, a lot of businesses were out of the business, were out of the market. But those that were able to stay were not thinking about making profit. They were thinking about what? Survival. That is survival, which is what? And a business objective, which is financial. Because if a business has to survive, it needs money to survive. You might not be making profit, but at least you are covering your variable cost. So that means you need money, you need cash flow. That is survival. Any question about survival? No. Then the next business objective, which is financial, is profit. Most of the businesses are set up with the aim of making what? Profit. And when we talk about profit is total revenue minus your total cost. So you only make profit when your total revenue is greater than your total cost. Total revenue is your price multiplied by the quantity you sell. Total cost is your fixed cost plus your variable cost. The amount you spend to make sure the product is available, that is your cost. The amount you sell the product, the price you sold the product is your revenue. So the amount you spend to make sure the product is available, you take it away from the amount you sold the product, that is your profit. Do you understand profit?
Yeah.
So most of the businesses, they are set up because they want to make what? They want to make profits. So the main objective of any business, most business, is what? To make profits. So if I'm setting up a business, I'm setting it up because I want to make what? Profit. Do you understand profit here? So most businesses are set up with the purpose of making profit. Profit is what? Return on investment. I've put money into something, I've invested into something. The return on that investment is called what? Profit. Do you understand profit here? So businesses may want to maximize profits to be able to increase the dividends of shareholders. Sometimes the owners of the business, they put pressure on managers to make more profit for them. They want to maximize profit. And when you talk about maximizing profit, it means they want to make the highest possible profit in that market. So let's say this is the market for education. So a business might set a profit maximizing objective, which means the highest profit that will be made in this educational industry, we are the one making it. So sometimes owners of the business, like shareholders, they put pressure on managers to make more profit for them. Because as soon as they make more profit, the more profit they make, the higher the dividends they get. Dividends are the share of the profits. So shareholders, they've invested in the business. But if the business make more profit, it allows them to make more dividends. Do you understand dividends here? So dividend is the share of the profit. But the higher the profit, the higher the dividend. The lower the profit, the lower the dividend. So shareholders will want to put pressure on businesses to what? To maximize profits. Do you understand profit maximization here?
Yeah.
So some businesses, as soon as they finish survival, if they pass the stage of survival, the next stage is what? Profit. They might start thinking about making profit. Now we survived. Now we are gaining customers' trust. Now we are known. The customers know us to be a very good business or to sell a quality product. Now we should start thinking about making more profit. That is profit. Is it clear? The next objective could be sales. A business might think about increasing its sales. When you increase your sales, what does that simply mean? It means you are selling more than your competitors. So when you increase your sales, what are the benefits of increasing your sales? Number one, it allows you to enjoy or exploit economies of scale. When your sales increase, it means you are producing large quantities, yes or no? So that means you will be able to operate on a larger scale, on the large scale. And when you operate on a large scale, it is expected that your cost of production reduces. So the amount you spend for each unit of product will start reducing because you are operating on a larger scale. So when you buy in bulk, you might have what we call discount, which is purchasing economies of scale. So the more you buy, the less you pay. So because you are buying more and you are paying less, your cost of production is what? Reducing. So that's a benefit of increasing sales. The second one is high reputation. When a business starts increasing its sales, customers will have a perception about it, like, oh, it's a good business. Look at how big the business is. So your reputation starts improving as a business. The third one, large market share. As soon as your sales are increasing, it simply means that instead of your customers to start buying from your competitors, they start buying from you. Because if you are increasing your sales, there's no customer in heaven. All the customers are here, right? So it means if you are increasing your sales, if your sales are increasing, it means more customers from your competitors are buying from you. And if your sales are dropping, it simply means your customers are leaving to buy from your competitors. Did you get it?
Yeah.
And the last one, more wealth for owners. As soon as the sales increases, more money comes to the business, more income, more revenue for the business. And the business will be able to do what? To expand. And if the business is expanding, it means the business is having more assets, more equipment, more machines. And that increases the wealth of the owners of the business. Do you understand? And the next one is to increase the market share. When we talk about market share, we're talking about the total brand sale divided by the total market sale multiplied by 100. The percentage of what your brand is selling in the whole market. This is a school, right? The market share of this school is the numbers of students this school has divided by the total number of students in all schools in Tripoli multiplied by 100. Do you understand? So if your market share is increasing, it means less from your competitors. So if your customers are increasing, it means your competitors' customers are reducing.
Yes.
Do you understand? So a business might set a target to increase or to gain more customers from competitors. That would be an objective. Is it clear?
Yeah.
And the last one is profit satisficing. For profit satisficing, we're simply talking about you making enough profit that will suit your lifestyle. Some business owners, they don't want to make the highest possible profit. They just want to make a profit that would allow them to have financial security. They don't want to go into spending, they don't want to go into the risk of expanding their business. They just want to make enough profit that would allow them to have financial security. So they don't want the business to grow, they don't want the business to expand. They just want a business that every now and then they're able to make money and make a living out of it. That's what we call profit satisficing. Here is not profit maximizing. For profit maximizing means you want to make the highest possible profit. But here, you just want to make a profit that is good enough to help you have financial security. Is it clear? Any questions about this? So these are all what we call financial objectives. And when we talk about financial objectives, we're talking about objectives that involves money. We can't have this. We can't survive without money. We can't talk about profit without making money. We can't talk about making more sales without money. We can't talk about increasing the market share without money. We can't talk about profit satisficing without money. So all these are what we call financial objectives. Any questions about it? Okay.